Welcome to Phil's Gang YouTube channel, the unfolding of the stock market crash. Got some great information for you. Let's start out with the jobs number. Listen to Steve Leisman yesterday before the jobs number came out.
This time, as you say, the consensus is for 1 million jobs, and the unemployment rate could dip.
He was all excited. 1 million jobs, 2 million jobs. He's all excited. Here's his response after they came in 266,000 jobs today.
It looks like 266,000. It looks like it was a big disappointment at 266. But maybe I have that wrong. Let me double check the Bureau website.
Yeah, Bureau website. Why don't you go to do some dumpster diving? Maybe you find it in a dumpster behind some restaurant, you dope. Unbelievable. Here's what they didn't want us to know. Listen to this. Listen to this. This is the truth. Okay? In February, when we lost all these jobs, remember, they went into a pool. Okay? They went into a pool, right? Okay, fine. So when they came out of the pool and the job market opened, the same people who lost their job got their job back. But no, what did they do? They had to come out and say, look at the new jobs. They could look at the new jobs. Look at the new jobs. Look at the new jobs. Oh, my God, we're going to have 1 million new jobs. Oh, my God, 1 million. And then all of a sudden we got 266,000 jobs. Woo, what happened? Well, the con job's over, man, okay? Because those aren't new jobs. The pool was empty. The pool emptied out. Okay, they're back to work. Okay, that's why you didn't get 1 million jobs, you morons. They thought that they were going to fool us, but guess what? We're on the scene, man. They didn't fool us. Okay, next, let's take a look at this here. Next, okay, that didn't work. All right, they didn't fool us. Here's what I want you to know. Please make sure you understand this. Here's how you know you're going to see some real signals that the stock market, when the stock market is going to crash, okay? You're not going to be surprised, okay? Here's why you're not going to be surprised. When you see the first heads up is when you got the Dow going up and you got the transports going up together. But when all of a sudden the Dow keeps going up and the transports divert this way, that diversion, okay, is telling you something's very wrong. It's telling you that they are building more products, but they can't sell them. The economy is slowing down. So that's a very good divergence, very good signal. Next, we always want the NASDAQ leading the way. NASDAQ leading the way, not the Dow. Well, this week we've had the Dow leading the way. The Dow leading the way. Wrong deal, wrong horse, wrong bet. No, you're dead. Next, utility companies. They borrow money all the time. And with yields going up, that means interest rates are going up on them. It's killing them, and their stock is going down. So keep watching their stock. So here it is. A divergence between Dow and transport. You start seeing the NASDAQ, the Dow leading instead of the NASDAQ, and you see utilities go down. Big problem. That's a big signal, okay? Big signal. And also gold going up. So you got some clues here, okay? You got some clues. You're not on your own. All right, here you are. Watch this. Okay, we just talked about gold, right? Gold going up. That's another signal of the economy. The economy's in a tanker and the stock market may be going down. Here's the way it works. Look at this. Okay, see the inflation right here? Okay, inflation is going up. Inflation keeps going up. And when inflation goes up, what does that do? That brings interest rates up. Yields on 10-year Treasury goes up. That's bad news, okay? And when the inflation goes up and yields are going up, dollar goes down and gold goes up. And gold goes up, telling you, economy in trouble. Okay, now remember when that happens. Now, don't forget when that happens. Make sure you add that to as number 4. Gold going up. We got 1, 2, 3. Gold going up. That's number 4, warning signal. All right, now here's the problem with all this inflation. Remember, they love inflation. Who loves inflation? Who loves inflation? Our Congress loves inflation because when you have inflation and yields going up, the dollar goes down. That means they're paying down their debt with cheaper dollars. So when we owe China $1 trillion because the dollar is worth less, so isn't our debt worth less. So China, let's say it's $1 trillion, and the following week they only really had 900 billion. We didn't pay it off. It's just the dollar's going down. Their debt value is going down. So that's what's going on. But at the same time, gold's going up. Now, why is that a bad situation? Well, first of all, if China gets grumpy with us because the debt is going down, not that we're paying them down, but it's weaker dollars, they could get very angry and say, you know what, we're no longer going to keep the yuan down against the dollar. They puts all those cheap goods in Walmart and Target and so forth. We're going to raise the yuan. We're going to raise the yuan. So that means when you go to Walmart, that T-shirt that used to be $5 is now $20. So they could punish us, and that would really take the market down. Now, here's the other thing with inflation. Look at this whole thing with the stock market going up is a big confidence game. As long as you keep the confidence game going, you can keep the market going up. But that's not going to happen, because here's what's happening to the folks. Remember, the rich people love inflation going up, okay? Because remember, when inflation goes up, so all their assets, their artwork doubles, their yacht doubles, all their assets keep going up. They love it. And as I saw you, the country loves it because their debt goes down. Corporations love it because their debt going down. But who's getting screwed? Who is getting screwed? Who always gets screwed? Main Street, right? Well, they're telling us everything is wonderful. But Main Street right here is getting screwed with inflation. Why? Because gasoline now, okay, is up 70% for the year. Oil's up 144% for the year. Okay, pork up 50%, beef up 74%, chicken up 23%. What are you, nuts? Housing up 15 to 30% depending where you live. Drugs, prescriptions 140, 180%. Are you nuts? That's all because of inflation. So they'll tell you, oh, we're fighting inflation. We don't want inflation. They want inflation. And that's why you need to be in gold, okay? You need to be in gold. So next, I got to tell you something, okay? Watch this. You got to see this. This is just incredible. All right. Now, they tell us every day how great the market is. Every day they tell us, right? The fake Business News Network tell us everything's fantastic. CNBC, Fox Business, Bloomberg, how great, everything's great, right? And the market's going up and how wonderful everything is, right? It's not true. It's not true because inflation is killing us. Now, here's the thing. Gold's going up. It's telling us the market is not good. And they're going like this here. They're saying, look, don't tell anybody. Don't tell anybody that we have gold. We have gold going up. Don't tell anybody. Now, see how gold's going up here? Well, guess what? Back here, we got gold going up. All right? So, again, let me just get this arrow for you. Okay? That's a real piece of work here today. Trying to get that up. All right. So now, again, so remember I just told you, gold was going up. That's an indicator there's a problem, right, in the market. Now, so now over here, see this guy's going, shh, don't tell anybody. So what do they do to try to get gold down, to pressure it down? They get other central banks to help them to push gold back down. They want it to go down, right? But when inflation keeps going up, gold keeps going up. And then they keep trying to push it down. They always have a battle. But they're telling everybody, oh, everything's wonderful. Whoa, what a market this is. When it's all a lie. So look, here's what you need to do. Okay, you need to look at these stocks right now, because if they keep on pushing up the market, which they're going to, with as much printed money as they can, and you get all this inflation, make sure you're only in these groups. Buy the ETF XLI Industrials, the ETF XLB, that's materials, industrial, transports, IYT, and banks, XLF. You need to be in these four right here. You need to be. And then the next thing, watch your gold. Okay, we already bought gold. Look how it's going up, right? I told you this was going to happen. And buy your mining stocks and see how the mining stocks are going up. So stay in these four ETFs and your mining stocks, and we're going to do just fine. But the next thing is you got to learn how to sell short. You got to learn how to sell short. Okay. Now I'm going to have a at noon tomorrow on Saturday, noon to 3, a webinar, a block of 3 hours, okay? We're only invited 50 people. We only got like 5 seats left, five web openings, okay? And so please, okay, if you want to learn how to sell short, you're going to have a 3-hour block. It's going to be 3 hours, but it's going to be archived for 2 weeks. So if you can't make it tomorrow, you got 2 weeks to review this. Let me finish with this. If you can just learn how to sell a stock short, okay, and know when to get out of the market, what a difference it's going to make. Look, I can tell you this right now. please, if they keep pumping money in the market and you see the market keep going up on momentum, please stay with these 4 ETFs and keep watching your gold. As gold goes up, you're going to make money, but also it keeps indicating to you as the stock market goes up, it's all fake and it's going to collapse. By you knowing how to short, you're going to catch the long position to a short position. Okay, I hope you enjoyed that. Remember to do like, okay, subscribe, and please do that for me. And please listen to my radio show on my YouTube channel. Always go to my radio show on my YouTube channel. Okay, again, don't forget, you can sign up for tomorrow, Saturday, okay, May 8th, for our shorting class, 12 noon to 3 p.m. Archive 2 weeks if you can't make it. See you on the charts.